the eternal bounce back. Is the worst over or not? There are two things that play out for eternal. The first part is the food delivery business that continues to slow down when it comes to the growth part. Quick commerce losses expand, and the company is cautious on competition. So if you look at the food delivery gross order value, over the last few quarters, it's been coming down, right? So look at Q4 FY24, it was 28.5%. It's come down all the way down to 16%. And this quarter, the most important part was it was not only down year on year, it was down quarter on quarter as well when it comes to growth. And quarter on quarter, there was a decline out there. And the company has given multiple explanations for that. They've said it's sluggish demand environment. There've been shortage of delivery partners. They've delisted about 19,000 restaurants this quarter. But most interestingly, they said cannibalization of restaurant delivery coming in from quick commerce. Why is that? Because if I can get something packaged in 10 minutes, why should I wait for 20, 25 minutes for it to be delivered to me from a restaurant? So that was something which I found very interesting. And because growth hasn't come by, the contribution margins also for the last couple of quarters have stayed stable. Now, here's what Zomato's thesis was. You grow the food delivery, which is a mature market. You expand its margins, use that cash to fund the losses on Blinkit and keep growing it. Well, that hasn't happened. Why do I say that? Because while Blinkit's gross order value has increased 134%, much higher than what the street was anticipating. Quarter on quarter also it's up 21%. Its losses have expanded and ballooned. Close to around 178 crore is the EBITDA loss on Blinkit, which was 103 crores in the third quarter, a negative 8 crore in the second quarter itself. It's ballooning. Why is it that it is ballooning? Because one, there is high competition. Secondly, the company is adding a lot more stores. And they've said they will look to grow market share aggressively and won't let short-term profitability goals come in the way. The question is, what happens from here on? And the one data point that I've always been looking at Zomato, even when the stock was at around 45, 50 odd rupees, the one data point that gave everyone a lot more happiness was the cash pile was increasing. But here, for the first time in many quarters, the cash pile has decreased. The company has said they're shutting down Zomato Quick and Everyday. They do not see the path to profitability here, and they may consider first-party inventory in quick commerce once the shareholders' approval comes by. And here's the point I was making on cash. 12,241, 12,539, 10,813. That was then up all the way to 19,235 because of the 8,500 crore cash raise that they did. But between this quarter and this quarter, there has been a reduction in the cash. So that's something I'll be tracking very, very closely going forward as well. Is there any reduction in their cash going forward or not? Because that will tell you whether they have enough firepower to fight this out or not. So the eternal question, whether the bounce back or whether the worst is over or not, the answer lies in their cash balance.